Hello and welcome to BQ Prime. A very good afternoon to all the viewers. I am Hiral Dadia. One of the stocks that is in focus today is a Greaves Cotton on the back of the second quarter numbers that have been reported. Clearly, if you go to see the revenues have seen a growth of around 4%. Margins have seen some bit of an improvement. However, the company has reported a loss versus a profit, and this is mainly on the back of an exceptional one-off charge as well. To discuss more on what's the trajectory looking like going ahead, Akhila Balachandar, CFO at Greaves Cotton, joins in. Akhila, good afternoon and welcome to the show.
Thanks, Cyril, and good afternoon to all of you.
Akhila, my first question coming to you is on the back of a one-time charge relating to a government incentive for electric scooter sales and higher expenses, the company has seen a loss this time around. What would this actually mean going ahead as well? And secondly, does this mean this will impact FY24 as a year?
Thanks, Cyril, for having me on the show. And let me split this into two parts. Part one on the one-time exceptional write-off that we have done and which goes as an exceptional item, as a result of which we have reported a loss in our financial results. If I were to move away from that, at an operating level, we have had a fairly good performance at the Greaves Cotton standalone entity level. For example, the standalone entity did a revenue of 855 crores at a half-yearly level, and we've reported an EBITDA of 108 crores at a margin of 12.7%. So on a standalone level, we continue to do extremely well, have reported robust earnings, and we've been doing a lot of work along our transformation journey to ensure that this remains sustainable. On the subsidy element, we have already intimated, as we have intimated, essentially, we have refunded the amount claimed by the government, and also we have provided for all the outstanding subsidy receivable. But if I were to remove that and see the operating results, Q4 of last year, the electric mobility division had kind of broken even. Q1 was impacted because of the regulatory matters, but Q2, we have done far better, and the losses have really reduced over Q1. So in that sense, it's been a fairly good operating performance for both the Greaves Cotton company as well as the electric mobility company. And if I were to remove the impact of the one-time exceptional item, I think we've done a fairly good operating performance.
Okay.
And to come to your third point, how does this augur for the future? I think I would let the results speak for itself. And if last 4 to 6 quarters, we've really moved the needle step by step, and I think that's something we would like to maintain.
Right. So let's look at it from a business contribution perspective, because clearly the diversification that we've seen, that is contributing to the resilience in terms of the revenues as well, right? Greaves Engineering, we've seen the contribution move way higher. It was 34% in the previous quarter, 51% now. Greaves Retail has seen a marginal uptick. E-mobility has dipped. Now, taking various segments of business into consideration, how are you seeing that revenue mix stabilize from here on?
So e-mobility is something that we are banking for the future. So if you see our transformation journey, what have we done? We're trying to become more fuel agnostic, right? So moving away from fossil fuel into cleaner fuels. And this has been the journey that we have embarked a few years ago. And this is the direction we are moving in. Over a period of time, we would like the cleaner fuels to contribute to a larger chunk of our revenues and profits. And that is where we are moving. Obviously, there are bumps on the way, and we are strong enough and resilient enough to manage that.
So in terms of the electric two-wheelers and the electric three-wheelers, we've seen a dip in terms of the two-wheeler segment, a 49% dip coming in there. Three-wheelers is still growing, but it's still a small portion. Is this a one-off where we are seeing a dip, And are you expecting the second half then to be stronger?
So if you really look at the entire two-wheeler industry, it was hit because of the changes in regulation and various other matters. Things are stabilizing, and I think the festive season is where all of our hopes are attached, and we hope that we get back into a much more better growth as we've seen in the past. And these 2 quarters are a one of is our expectation.
Okay. And if you have to look at a product mix, what is that going to look like, taking into consideration domestic as well as exports? And what is it that is going to support growth going ahead?
Sure. So today, Hiral, our exports would be less than 10%. And what we're working is to get this moving towards 15, 20, 25% over the next 3 to 5 years time frame. So that is from an export perspective. If I were to look at a product profile, as I said, uh, at a very broad level, what we would like to see is moving away from the fossil fuel towards cleaner energy, which could be EV, CNG, also hydrogen, and try and be fuel agnostic to the extent possible.
Okay. So, Akhila, overall, from here on, what is going to be the growth strategy, not only for the second half of the year, but from a longer term perspective? Where are you planning to geographically increase footprint? How is it that you're planning in terms of your distribution network, etc.?
Well, we are very strongly present in India, and we will only increase our footprints. For example, Greaves Retail, we are very strong in tier 1. We are expanding to tier 2 and tier 3 cities. Electric mobility, again, they keep on expanding their geographical footprint. And the next step that we are looking is to grow internationally. And as I said, the idea is over the next 3 to 5 years to grow the export portfolio to a 20-25% of the overall turnover.
Okay. Any inorganic growth that you're looking at?
As you know, we are a debt-free company. We have enough cash pile sitting with us. We are very mindful of what kind of acquisition we would like to do. It has to kind of fit in well with our existing product portfolio and add to the product portfolio. And that's something we are constantly working on. If you know, we've done an investment in Excel, which is working out pretty well with us. And anything similar, which will add on to our product portfolio and the customer portfolio, is something we are definitely working on.
Right. Akhila, my last question is, if you have to look at FY24, what is the guidance or the growth that you're looking at, and what's the next milestone that the company wants to achieve?
In terms of guidance, what we would definitely are working on, and we've demonstrated over the last 8 quarters, is improvement in EBITDA margin. We did have some hiccups during the COVID era, and I think we are now well behind that. So if you see over the last 8 quarters, and that is what we would like to look at and keep on working on, is keep on improving the EBITDA margin, whereby we become fairly healthy and sustainable. So that is where we would like to see ourselves end of FY24 and set up for a very strong FY25.
Right. Thank you, Akhila, so much for joining us on the show and sharing the views. Clearly, it has been a volatile ride, but the growth story is what we need to watch out for. Thank you. Stay safe and speak to you soon again. In
Thank
terms
you.
of the stock of Greaves Cotton as well, today is down almost to 2.5% as we speak. 5 days, a 2% up move is what we've seen. And in the last 1 year, 17 to 18% is the kind of downtake. But from here on, with the strategy that the management has, let's see how it augurs for the company and the stock. That's all that we have on this session. Thanks for watching. And lots more lined up on the other side. Please stay tuned to BQ Prime.
I wanted to wish all the viewers of BQ Prime and the channel a very happy festivities and a very happy Diwali. Happy investing.